Welcome everyone to another episode with Araceli and Colette. So remember to subscribe if you want some more information about what you need to know to become a real estate investor. Maybe this is something that you want to do and you have an interest in. Colette, can you introduce yourself
Of
and tell us
course,
what we're talking about?
of course. Hi, everybody. My name is Colette Rava. I am a residential real estate broker. Oh my God, my hair day. Residential real estate broker in the GTA. That's Ontario, Canada. And Araceli, I'm with you today because why? We love talking about real estate and things that you might not think about when you want to buy or sell real estate, either house for yourself, income property, anything out there, land.
Yeah.
So, what are we talking about today?
So there is actually, we've been talking to a few mortgage brokers. And the same thing keeps coming up. People are not qualifying for mortgages. So today we have a few reasons why you may be declined on your mortgage. So there's a lot of things that people don't think about when they go to actually get a mortgage. We're very excited about getting a new property and don't look at the details. Remember, the devil is in the details. So you have to look at everything. So before you go out there and look for a mortgage, try to go over these points that we're going to go through today.
Right.
Make sure that you have the higher probability of getting approved.
Right. And the other thing, the more important thing is,
Yeah.
as a realtor, if you are not approved for a certain amount of money, I will not show any houses. Because I'm
Absolutely.
not going to waste my time. I don't want to waste your time. You tell me you have $1 million budget, but there's no way the bank will ever give you close to that money. So let's be honest and reasonable.
Absolutely. You see, this is something that I think people kind of work a little bit reversed because they get so excited about, oh my God, let's go see houses, right?
It's human nature.
But you have to really look at how much am I approved for before you engage a realtor. This is
Right.
something that has to do with your finances, with all
Right.
of what you're doing. So the very first thing that you want to look at is, guess what? Your credit. Nobody wants to look at their credit, right? But if
You know
you're
what?
thinking about buying a house, the sooner you can look into your credit history, because there might be something there that you don't even know about. If your name is common and somebody else has a similar name or the same name than you, they might add something that does not belong to you. So it's very important, at least once a year, you look at your credit history, make sure that everything that is there is taken care of. If you already paid a loan to an institution, that is reflected in your credit history.
Right.
All of that needs to be accurate because all of those you don't know how it's going to affect you. Most likely it will be a negative effect in your credit, so you want to take a look at that. And if you don't know how to get your credit, there's very many ways to do it. It is free if you get it on for yourself. The biggest institution in Canada is equifax.ca. You can go there. We're not associated with it, but we'll just tell you about it. That's the best way to get your credit, and I will
Score. Your
pull
credit
that
score.
every single year to see what is going on.
Well, I just want to add something to that. I think we did a show on this way early on about having your identity stolen and what happens to your credit score. That's very, very, but this is really part of what we're talking about with the number one. So your credit history is one thing. The other thing is not having enough credit. So this is part of number one,
Yeah.
the same topic of credit, where you have to look at having enough credit. So I actually had a client, very nice young lady. She had one credit card, hardly for 6 months. And the bank was kind of like, she doesn't have any credit. Like, there's no credit history. What do we do? So credit history is part of your credit score too. And to build your credit history, people new to Canada, they have no credit history, new to whatever country they're going in. They have to get a credit card, maybe even buy a car and do payments on a car. So anything that builds that credit history for you, paying rent on time, all these things matter for the lender, the bank to look at before they give you a mortgage.
In some cases, when you go to see a mortgage broker, that's the very first thing that they're going to ask you. And they call it trade lines. That means if you have three different sets of credit. It could be a credit card, a line of credit, maybe you have a car loan, maybe you have a student loan, and they want to see that you have it, and it is, each one of them counts as one. I believe they require three. I don't know if this changed, that you have at least two or three trade lines, which is different credits, and
Right.
obviously are paying on time, all of that. That's the what they
Right. And it's not three credit cards. So just to
no,
be clear,
yeah,
so when
correct.
that's what I like about that term trade lines, is to
Yeah.
say, okay, three different things, like a car payment, like rent, like some
Even
other,
your cell phone actually goes into your credit.
I was
So
gonna say some
if it is
monthly,
going to be a bill that you're not going to pay, it's not your cell phone, please.
they'll see
If
it.
you don't pay everything, like let's say that you have a big, huge cell phone bill for whatever reason, make at least $20 payment towards that month. Don't just, oh no, I'll pay it when I collect the money. No, make a little bit of a payment, because that will actually be recorded in your credit score. So
Thank you. Yeah, that's very, very important. That's great. Yeah, so credit is very important. Credit score. So the credit history is one thing. Credit score is another. So in the same vein, but this is a little bit different. So credit score has to do with you paying your bills on time. So now, you have your credit card, you have your phone bill, you have your car payment. This is the thing. If you're not paying something, your credit score will be affected, and that will affect your credit history. So even though they're two different things, they are a reason why a bank, you might have a great credit history, crappy credit score, you're not paying a bill on time, even the minimum payment. So they might
exactly,
reject you just on that.
yeah.
So do you want to add anything to that
So, well,
score?
the credit score really, it has different things in it, but there's basically three things that you want to look at in simplistic way, right? So first of all is the length of time that you had the credit. So how long you had that credit card open for. The utilization of the credit. So if your credit card is $10,000 limit and you're using more than 30%, so that means you at any point in time you have $8,000, that means you're almost using up all your credit. That affects your score and the time that you make the payments. So you have to make the payments on time. So those are the three things that really affect negatively your score. So if you can make sure that either you have it on what's it called, a
Automatic
automatic payment,
payment.
so you don't miss at least the minimum payment. You can pay
Absolutely.
more later, but at least the minimum payment is paid on time. And the same with the utilization. So if you have two credit cards at $10,000, it's better to have three and three instead of having $6,000 in only one credit card. So
Right.
that's more or less what they do with the credit. So
Okay, so we took care of credit. So the
yes,
bank can reject you on the credit. So the next thing we want to talk about is the down payment source. So I'm getting funds from some crazy hole in the ground, I don't know, secret secret place. So banks don't like that. They want to see where you're getting the money from. They want to know the history of where this money has been. If you're working every year, you're working you get a paycheck every 2 weeks, you put away all this money into a separate account
yeah,
that is just for the down payment. That's the down payment source we're talking about. So
yeah.
they want to see a history. What is it, 60 days? 30, 90 days?
Yeah, at 90 days. So 3 months, you basically have to prove that you have those funds. They cannot just show up in your account
Yeah,
yesterday and now you're buying a house, right? And remember, this is here in Canada, and I think it's everywhere because of the amount of money that is required for a down payment in any house, right?
yeah.
So it could range from 5% to 20%,
Whatever you
right?
have. Yeah.
And that is quite a large sum of money. They want to see, maybe it comes from your RSPs that you've collected over the years. If you do have a family member, maybe your parents or an uncle or anybody in your family that is giving you a large amount of money, it still has to be in your account for 3 months. You have to have a letter from them saying that they are gifting you $50,000 to your name, whatever it is, and the deposit in the account. So it has to be traceable to something. You cannot
Right.
just appear, the money's there, and now what, right?
But
Like,
it's also just like what you said, even though a family member is gifting you this money, you have to have something to say they're not going to take it away. Like this is it's not a line of credit that I'm putting on their house. It's not like I'm putting it on a credit card, God forbid, like you
or
do.
this is not a loan, okay? It's not a
Right.
loan from them.
Exactly. It has to be shown that this is a gift or whatever it
Yeah,
is. You know, let's say you have a wedding and you have all this money that people
yeah,
have actually gifted you. Put that in the account right away. 90 days. You got to squirrel it away. Don't touch it. Show where it came from, even if it's an explanation. We got married. These were gifts.
yeah,
That's fine. That's enough. But they just want to know it's not falling from the sky. Maybe you win the lottery. Sure,
yeah.
that's great.
Oh,
But
yeah,
you
well,
have to show how. Where did it come from? Yeah,
yeah.
so that is your down payment source. What's the next one?
So the next one would be your employment, right? You may not be employed for long enough at a place that you're in. Most people, depending on their profession, they will take something that is 3 months minimum or longer. The more you have been employed, it's at least 2 years. That would be the ideal, right?
Thank you. Yes.
Now, if you are a self-employed, you need to have your notice of assessment for the last 3 years. So they will take the average of those years, and that would be your income, right? So if you,
Yeah, and I've had that too, where, you know, my clients are so excited that they're like, "Oh, I just got a new job and oh, I'm still on probation." And I'm like, "No." Like stop, just pause for a minute. Let's get your whatever 60 days or 90 days, whatever probation thing. And then go and apply for a mortgage and see what the lender
correct.
says. This is not about showing houses. This is about mortgages and getting approval, and why a bank may not, they might want to see a longer history. They might want to see 2 years that you've been in that current position. So, you know, it's really disheartening. And I know, you know, this is not a good news kind of show today, but what we want to do is help you get ready. So you do the right things at the right time. You don't go and take this money. You can absolutely put the money into a TFSA
Yeah,
and
yeah,
use it. There's nothing wrong with that. We're not saying don't put it away and do something with that money in the interim, but it's that, you know, build your credit, get a good job, sit tight, don't go crazy and buy like, you know, fancy cars that you can't afford because now you don't have your down payment anymore. So things like that, financially, we want you to get prepared.
yeah, absolutely.
Okay. Next
Uh,
thing.
so the next one would be that the property has a stigma.
A
And
lot of
that
people don't
is,
know that.
you need to really speak to your realtor so they can know the history of the property if they can. Also, the area. There sometimes it's just considered not or a high risk area, and the bank doesn't want to take a chance
Right.
on approving that kind of mortgage, right?
Well, and I've talked to my mortgage broker friends too, and they say, "Oh, stay away from that building." I'm like, "Why?" They're like, "Oh, we can't tell you." I go, "What?" This is ridiculous. So there is a list out there. I am not privy to it. I don't have it, but the banks do have it. And there are certain condos that have stigmas attached to it, either because, like you said, they're not in a great area, their maintenance is too high. There's something in that building that might have issues that are kind of not a good investment. So even though you're saying, "Oh, well, this building is, you know, $500,000 and then this building is $500,000, you know, this one might have more square footage or something." But when it comes to getting the mortgage, like ultimately the thing about what I want to say in this show is you want to get all these things figured out before you agree 100% to buying a property. So protect yourself in this way where you know you can get a mortgage, you know that the property doesn't have a stigma or is in the wrong area, or there's something else wrong with it. Maybe it's a mobile home. Maybe they don't like the land lease, like all these terms that I'm using. If you don't know what I'm talking about, please talk to a realtor first before you go ahead and buy a house, because the price might be great. The price is
Yeah,
unbelievable. Why? Why is it unbelievable? There's a reason.
exactly. Yeah, you got to ask yourself that question. If a property is sitting there with a great price, there might be something there that you may
Right.
want to look into it. So,
And if nothing, knock on wood, let's say it's a great property, just for whatever reason, it's on maybe the seller just wants to sell it. Still doesn't guarantee that the bank will like it and give you a mortgage for it.
correct.
Yeah.
And the one thing that I always want to say to you that is not in the list is that get yourself prepared financially, always. Because the expenses of you renting, if you're renting today and you're looking to buy, are not the same. Never, never, never the same. Even if your mortgage is more or less equivalent to your rent already includes everything. Your mortgage is a standalone that it
Right.
requires property taxes, requires insurance, maintenance,
Utilities.
utilities, all of those things that you don't currently pay if you're renting.
Right.
So that is super, super important. A lot of people say, well, what I paid in rent is almost the same that the mortgage, just a little bit more. No, it's not a little bit more, it's a lot more. So sit down, and it's just worth to look at a mock-up of a budget. How much is it going to cost me to live in this house that I'm buying?
Who can do that for me, Araceli?
Yeah, maybe you can sit down
Maybe
with me.
you?
Yes, believe me, is worth it. I actually just spoke to a client of mine, and her and her family are looking to buy a property. And I sat down with her, and she's so excited about trying to get a property. And I says, well, what kind of property are you looking for, right? And it says, well, this property is like 1,200,000, 2,300,000. I said, oh, that's very exciting. That's good. Which is an average house, especially if you have a large
Yeah.
family,
Sure. Yeah. In
right?
the GTA. Yeah.
Yeah, exactly. And I says, okay, well, tell me more, right? And then she starts telling me about her income, and the income, it is very, very low. And I said, well, how are you going to qualify? Do you actually go to a mortgage broker and qualify? But
Right.
she's actually looking at properties with realtors. And I
Right.
said, no, you
And
gotta.
how did the realtors not even ask her that question? Can you
Exactly.
afford
I'm
it?
saying, like, fire your realtor, please, because if they're not sending you to the mortgage broker, and if the mortgage broker is actually giving you false hopes, right? Because the mortgage broker, according to this lady, is saying, make sure that you have the down payment, and we'll figure it out. No, 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 right? Just walk away if somebody tells you that. They actually have to go through your current financial situation and tell you more or less what you need to
You know
qualify
what?
for a certain amount of
saying
money.
that saying that really really upsets me, because of course you can get a B lender, of course you can get a C
Of
lender if
course.
you have a low, like, this is the things that people don't realize, that you can get a mortgage but you're going to be paying through the nose. First of all, you'll get a 1 year
Mhm.
mortgage, very very high interest rate, plus you have to pay for them to give it to you, so that could look like $20,000 extra out of your pocket that's
Oh,
not going into a house, just gone for
yes.
1 year. So when you really think about getting a mortgage and understanding, do all this work before you go out, please. It will save not too much time for me. Okay, whatever, that's fine. I want to save your time and your aggravation to say, oh my gosh, yeah, I can get a mortgage, but guess what? If that realtor isn't good and they don't write it in that says you have to be pre-approved for a mortgage, and then you could lose your shirt, you could lose your down
Oh,
payment.
yeah. Your down payment, your
Please.
deposit, whatever it is. That's why I emphasize that. And that's what I'm saying here in the show, that that is not the right way to go. You got to
Yeah,
look at
thank
your
you.
finances. You have to be very strong, especially if you're buying a property that is quite a bit of money and you're not putting a sizable down payment.
Right. You could really lose your shirt during all this if you actually write an offer and you don't get pre-approved. So there's a lot of horror stories out there. We don't want to scare you. We want to keep you safe. So the last thing that we have on the list is the appraisal. So this is something that the banks, you say, okay, here's the house. This is they send
Yeah.
the listing. They send whatever information, then the bank will take an appraisal. You pay for it, but the bank will send an appraisal to go check it out and see if it is. If the appraisal, so this is what was happening a few years ago when
Yeah.
prices just went through the roof in the GTA and the appraisals were coming in too low. So this is the scary part about that. When you go and you buy a house and say everything else, you ask your realtor, is this a good deal? Is this a good price? You go, yeah, well, all the houses in the neighborhood are in that range. So you think you're safe, but the appraiser thinks differently. If they're and of course with the banks don't want to just give out money to something that, oh, just because it's a beautiful house. It's if the valuation is there, if
Yeah.
the appraisal, they have a lot of power. If that appraiser goes out and says, yes, there's good value in this house, it's got good bones, good property. There's also the difference between the land value and the land value plus the house.
Yeah.
A lot of the times the land is not worth it, but the house is more worth it. They don't like that. There's a formula. So whatever you do, when you get the appraisal, just keep your fingers crossed
Yeah.
that
Well, the
the
thing is,
appraisal will agree.
this is what happens when you have offered a lot more value that the appraisal value is. If there is a difference, you are responsible to come up with that money
Thank you.
at closing. And if you don't, you're going to be in default, and therefore you're going to lose your initial deposit.
Or the bank will just not even give you the mortgage. So that's
Exactly.
the other thing too.
Exactly.
If the appraisal and the price of what you're paying for the house is way too different, the bank will say, no, sorry, it's too risky for us.
Yeah.
Banks, believe it or not, in Canada are pretty risk averse. They don't like that. They don't want to give you loans just,
Correct.
forever.
And I think everybody should think the same. Like you have to buy something that it is comfortable with your current financial
Yes,
situation.
absolutely.
If you trust yourself, if something changes in your life, guess what? You're at risk of losing the house.
Well,
So
look at the mortgage rates mortgage rates just went up again. Do you know how many more for sale signs I'm seeing these days?
yeah,
So things like that, you really have to, and that's why in Canada there's a stress test where you have to get approved for more than what the going mortgage is. Even though you can afford the 5% mortgage today, doesn't mean that it's going to stay 5% over that course of time that your mortgage is available to you.
yeah, absolutely. So
Yeah.
that's a lot of things to think about and to prepare for. But remember, preparing for it's much better. The longer you do it before you actually pull the trigger, the better. Because then you're gonna have all of these things put in place and you're gonna have a better chance of getting approved. So
That's
that's
right.
the contribution for us today. So please do a lot of planning. I know sometimes it's not fun, but that planning is going to save you a ton of time at the end. And when you find that beautiful house that you want, if it's your very first house, you're going to be ready and you're going to be approved. Or maybe you want to buy that investment property that you're looking for. And the same, it's going to be the same. This is not only for the first house, it's for your investment properties, anything like that. The more prepared you are, the better chances you get.
Okay, so let's recap.
Yes.
Can we do a recap? Okay, so the other thing, don't forget, you have two wonderful resources right here for you. You can call either of us, text us, email, whatever you want. If you have any questions, please, we'll help you through all this. This is great for you to get ready. What's the saying? Fail to plan to fail.
Yeah.
You got to plan it out. So first thing you got to take care of is your credit score and your credit history. So that's two things. Credit score and credit history a little bit different, but
Yeah.
one of the hand in hand,
Hand in
right?
hand, yeah. So the down payment source, that's the next one.
Yeah. Your employment, or if you're self-employed, you really have to get that figured out. Don't find a house when you've just started a new job. We're on number 5.
Yeah. So the property has a stigma or there is something kind of shaky there that the bank might not like. So you may want to talk to your realtor on the type of property that you want to look for.
Yeah, and the one thing we don't have any control over is the appraisal. If it comes in too low, that's, you gotta have to.
Yeah.
A mortgage broker will give you an idea even before you make an offer. So
Yeah,
with a
exactly.
realtor and a mortgage broker, I talk to them all the time during a sale too, a purchase, and I say to them, listen, tell me about this, tell me about that, and they give me information just to give me a little bit more incentive on the appraisal and how that looks. They have different access to different things as I do. So it's really good to find a realtor that has a mortgage broker that they're very,
We're working
very
with, yeah.
comfortable with and they like working with. Yes.
Yeah.
So I think that's it. Did I forget anything?
Well, the last thing that I mentioned is remember to look at your finances first of anything, because that is going
Always.
to depend on what you're gonna be able to buy. Money
Absolutely.
touches everything. So do your research, do your homework. If you don't have a financial advisor, please let me know. I'll be happy to look at whatever you have and what you want to do. And then, obviously pair with Colette to be able to give you a better assessment of what you need to do if you're looking to buy property. So,
Yeah, absolutely. We're a tag team.
yeah, so that's great. So thank you, Colette, for being here, and we'll see you next week. Thank you, guys.
Thanks
And
for joining us.
remember to subscribe. If you have any other questions about why you cannot be approved, or maybe you have not been approved for a mortgage, let us know and see if we can figure it out. Okay?
Yeah, sounds good.
We'll see ya.
Bye.
Thank you for being here on the show. Please remember to subscribe and hit the notification bell to get notified when there are more shows available. And if you would like to have more information on how to start investing in real estate, please visit my website at www.aracelyhernandez.com. Thank you.